Okay, everybody. So happy to have you here. Welcome back to another weekly Lunch and Learn. I'm Joel Landon with Heritage IRA. So happy to see many of you joining us today live. I'm so glad that you got the opportunity to take some time out of your day to join us. This is being recorded, so we're happy to share this with you. In fact, my goal is to send out an email after this with the summary link so that you guys can access that. And my gosh, yeah, just a couple of housekeeping items. Um, I've got everybody on mute right now, cameras off, but we do have the chat on. So if there are questions that you have in the moment while you're listening to Jasmine and myself share about today's topic, please let us know. Drop those comments, those questions even in the chat, and we're happy to address those as we talk through this. The goal is to take about 45 minutes together today to talk about recession proofing your retirement and your investments with notes. And we're so happy to have Jasmine here with us today. She's a professional that's been in this industry for a long time from NAP, her business. She's going to have a chance here to talk a lot about that, some of the opportunities that she has for you as an investor. But we're also going to break down through some interview style Q&As, really what it means to invest in these types of tangible assets. Some of you could be really new to this type of asset class. Some of you might even be new to self-directing your retirement through an SDIRA or a solo 401k. Some of you might be our clients that are already using a self-directed IRA, and maybe you're looking for an opportunity to place your funds. This is a great opportunity to get to know Jasmine, to know what she has to offer, and hopefully you guys will have a chance to book some time offline, have a one-on-one, get to know her better, and understand how maybe this is the right asset class for your strategy. So we'll get right into it here. Like I said, feel free to use the chat screen. We might even do a Q&A at the very end, if time permits. But with that being said, Jasmine, super happy to have you here. Why don't you introduce yourself and then we'll get right into some of the meat and potatoes.
Yes, hi. Can you guys hear me okay? Am I
Yeah,
on?
perfect.
All right, perfect. Well, nice to meet you. This amazing audience of people who are ready to think outside the box and take this economy head on. And yeah, I'm excited to be here. I'm reporting in from San Diego, Southern California, but proud to represent New York as an original New Yorker. So,
Love
said, and
that.
I know you have a Q&A session, so you want to ask me questions as we go. So, but yeah, thank you for having me.
Absolutely, Jasmine. Well, why don't we just kind of get right into it here? Why don't you, I figured we'd kick things off initially with a couple of questions like, what are mortgage notes? And in your experience, why are investors using them as a part of their retirement strategy?
Oh yeah, excellent question. So it's two layered. So one of mortgage notes, obviously we can get into that very extensively. There are books and courses. As a matter of fact, I have a course I'm doing a master class in Houston in April on that exact topic. But in short, the best way I like to explain it to people, if you're out there, if you own a home and you have a mortgage on it, and one day you get a letter in the mail saying to please start sending your payments elsewhere, that's what mortgage note investing is. Someone has purchased your mortgage and it's decided that that income, which is your principal and interest that you send in, right, is good for passive income for them. And so they have discovered this as a tool to be one of the most passive forms of income you can get. And so if you think about it, mortgages is top priority for people. A lot of people, when they file bankruptcy, it's to protect their home, right? When during a recession, they want to protect their home. This is what they save their money and cut other expenses so they can protect their home. So it's considered one of the safest forms of passive income.
Okay, very cool. So how does NAP get involved? Where do you guys fit in? And as you're interacting with investors, what does it look like for them? How do you break down that opportunity for them and usher a client along to invest with you in NAP?
Well, the NAP was a brainchild that was started in 2013. And what we do is we just walk through and handhold investors that are new to the space because for specifically our target audience, which are women and people from the LMI community, right? So if you come from a lower to moderate income and so you struggle to get where you are, right? So a lot of this stuff may be foreign to you. So we want to get this and break it down. And so that just requires human interaction, right? So it's one of the last programs out there that's not you and an AI bot or a video, but we sit down with you, make sure you understand it. I personally wait till I see that light bulb over your head to make sure you get what you're investing in before then. But other than that, it's a straightforward product. To the extent that we've all some form or other either lived in a house or taking care of a mortgage as a from a borrower standpoint, right? And so now flipping the hat and becoming a lender or assuming someone's mortgage it's just a wild experience. It's also one that's backed by the real estate, another asset class that we can relate to. So when you think about the other alternatives out there, which are amazing, right? But they come with their risk. So you're talking about the Bitcoins out there, amazing opportunity, obviously, but very volatile. I think it's down from as high as 30% as of today. But again, still a lot of money to be made there, right? So depending on what your stomach is, right? And if you're looking at the stock market again, you may see a lot of volatility come up in there. Yeah, mortgage notes are a product that most of us can relate to. So the NAP brings that, makes us understand it, helps hold their hands, and then provides inventory so that they can start buying mortgages. But from that standpoint, it's a small company, and you work with individuals, right? So I consider this a family. And so a lot of us have invested together for more than 5 to 10 years. So
Very cool. That's awesome. And Jasmine, I know you put together a landing page that's kind of tied to
yeah,
this.
may
Is
I
that
share?
something that you'd like to share during this presentation?
Yeah, I'd love to share it if I can share my screen, but I want to follow your instructions too, so I can also just share it in the chat. But yeah, I put together a small presentation that and we can scroll through if you like, but I just put in the chat, so you guys are welcome to scroll through it as we go through this as well.
Yeah. Why don't you share your screen? I think that'd be a great opportunity for you to pull that up and share your
Okay.
screen there and kind of walk the individual through, if you don't mind, that experience and give them maybe a firsthand review of what the opportunity could look like for them if they're ready to deploy capital.
Okay, well, first, while I'm pulling up my screen, I want to start by saying mortgage notes is a very amazing complement to a self-directed IRA. So, as far as if you're new to this or if you've been around the block a while, you can attest to the fact and something that we cannot stop to mention. So, if you're listening, this is the part you want to write down. Mortgage notes is a very great complement to a self-directed IRA. So that's why I've always partnered with companies like Heritage IRA, and probably about 60% or more of our transactions are done through people's self-directed IRA, right? So I really want
Wow.
to highlight that because a lot of times people may be thinking I may not have the money to invest and it may be tucked away in an old job that you can roll over. So a lot of our members access that through Joel. And so having the resources is our main tool and our main advantage, in my opinion, outside of the training. Once you get it, or you may already know it, the next biggest thing to being successful, not only in general, right, but in notes specifically, is having those resources and those relationships, right? So I'm very willing and able and do pass those on, and that's really where the success comes in because most of us here, you know, we're ready to take on some level of investing. And that's really the main thing. You have to determine how passive do you want to be? Let me know when you can see my screen.
Yeah.
But
Perfect.
note investing is definitely an alternative to the stock market and those other things that may be a little more risky, even real estate, which right now, you may seem a little more risky. And so it's a complement, and a lot of people use and they pair this investing with your tool.
Wonderful. Awesome. I appreciate that. Yeah, if you wouldn't mind just kind of breaking this down for us and we'll follow along.
Okay, perfect. So I put this together so you guys can access it. I put the link in the chat as well. It's also on our website of NAP equity.com, napprivateequity.com, excuse me. And so when you can click on here, this will show you how you can open an account with Heritage. Like I said, just finding the money is usually something. If you have left a job, that's usually when you can roll things over, right? A lot of people have, in my community, been very successful with our performing notes, taking out HELOCs, but finding the money is the first piece. So this is one of the ways that to help you find that money. This is a link to our website for the Nap Nation community, and this is something we can find a little bit more about me and allowing us to spend more time on the topic at hand. So as he asked, what are mortgage notes? We're literally buying the paper. And so that's how we actually can separate it from the real estate, the underlying asset, because Again, we are not owning the house, so you have to be able to say, "Hey, I bought this, but I'm not getting keys, right? And I can't go knock on these people's doors." So it's really a mental shift more than anything. And a lot of people have struggled with that, especially if you spent the last 10 plus years in real estate, where you get to knock on a door and go to Home Depot and fix things. So you're actually buying the paper. If you think about it, there's going to be different grades of the paper when it comes to notes because some people are paying a paper all the time. That's what Wall Street comes and gobbles up. Right. And that's what I'm really dying to get my members exposure to because it's obviously phenomenal returns there if Wall Street is so feverishly gobbling us up where they're even keeping it from us and a lot of us don't know we can invest in it, right? So the secret's out. And what are they buying? They're actually buying the paper. So they're trading the paper that makes it a lot more fluid, obviously. And you're protected from a lot of risk that you have when you're buying the real estate. So we'll get into that a little more, but I wanted to show you this. You guys are welcome again to access this and go and read through it and take your time. I'm just going to brief through it and kind of touch base on some and highlight some of the points you should really take note to. So that paperwork is what you're buying. A lot of what we're doing is all cerebral, right? So instead of brawn, where you're going again, when I think about flipping, I flipped for about 5 plus 10 years actually, since Kevin was 3. I was flipping homes. And so that took a lot of brawn, right? And a lot of hard knock learning. I'd love to share those stories for those of you who know. But so when I found about investing in paper, it became a no-brainer for someone, especially with my background, when it came to trading on Wall Street. So I actually was on Wall Street trading in New York City during the dot-com era, right? So talk about crazy stories and understanding the fluidity of just trading paper, right? And then it was stocks. So when I saw this, this was a perfect marriage between stocks, if you like to just trade stocks, and real estate, right? So it's backed by real estate. So how mortgage notes function, excuse me, inside of self-directed IRA. This is one of my favorite parts about it because when you put this note into your IRA, it is tax sheltered. And I'd love to have you speak to that a little bit because this is where the magic happens, in my opinion, and allows you to have a broader outlook of notes, right? You can go in and now think a 9% note with a 9% coupon is competitive because if you're not paying taxes on it, last I saw, and I'll let him be the judge of this, but you're adding another 3 to 5% to your return. But speak to the advantage if you don't mind.
Yeah, absolutely. And those listening today, you really have two options when you're investing with a self-directed retirement or a solo 401k. You can invest with your pre-tax dollars or dollars that are tax deferred. And just like Jasmine is saying, in these instances, you can defer the tax on your gains and continue to grow that money. And of course, there's going to be a taxable burden at distribution. You're going to get taxed, based on how much you do distribute at an ordinary income rate. So it's going to look a little bit different than in retirement when you take those distributions. But at least while you're growing that money in the tax advantaged account, deferring the tax on the gains, you're able to grow that money that would otherwise have been taxed on an annual basis by the IRS. So it's like you get to use the money that typically would have been taxed and paid to the IRS to grow that balance over time. Now, on the other side of the house, there's the opportunity to convert those already existing real estate notes to Roth. And ultimately, we would want any of our clients to have investments like this with Roth dollars. Those funds are going to grow over time, tax free. And at distribution, you don't have to worry about any of the taxable burden at that point. So it's a really powerful tool when you're using an IRA to either invest with pre-tax money or Roth money or a combination of both. And again, you can make those conversions over time. So Jasmine, did that kind of help illustrate that point there for you?
Yeah, 100%. I don't know. I lost my video, but I'm back here. Yes, 100%. That was amazing. You guys can still see the screen?
Yeah, right now we can see your Chat GPT screen there. If you want to move it back over to your landing page.
Oh, okay. Perfect. I was wondering. Thank you so much.
Of course, yeah.
Got a little discombobulated here.
That's okay. No problem at all. Love to see you're using Chat GPT. That's always a helpful tool. Can't complain there.
Yes. If you're not using it now, right, then what are you using? I guess it's the way of the world. So, all right, let's get into that. And actually, it's amazing that you mentioned that because one of the things we talk about in the training class that's going to be in Houston in April is how to use ChatGPT to help you analyze notes, right? This is an amazing tool, right? I'm using this thing for reasons that I never thought I'd ever used them before. So, for those of you who may be, intimidated by the math behind investing in alternative investments, ChatGPT for sure. All right, so getting back to how they function inside of it, you they are the custodian. So they're the ones that take in the note, right? And it's going to be under their name. So they create an account under you. So he's again going to be explaining more into that. If you want to know more about it, go ahead and schedule a call with him. But the beautiful thing about that is that's where that tax shelter ability comes in. They're maintaining the records for you, right? So when it comes to all the forms and IRS stuff that normally complicate these things, um, this is where I love working with these companies, and my investors love working with companies like Heritage IRA. And so, last thing I'll say about that piece is once you invest, so if you have a performing note, that income is going to go right back in to that account, as he mentioned, right? So you cannot get access to it. And that's the beautiful thing about it, right? And there are going to be other rules, but these are things that protect you as a normal human being when you come back and you say, oh, why is my savings this? Why is that? Well, it might be because you've had access to that money. Right? And so keeping it 100, this is one of the beautiful things about working with them. Is my screen still in the same place?
Yeah, right now I could see, let's see here, why notes are often considered during market uncertainty. If you could scroll back up, I'd love for you to distill a little bit, or scroll down at that point. You have a really good
Hmm.
versus or comparison there, performing versus non-performing notes. You mind breaking that down just a little bit more?
Yeah. Let me
What
make
that
sure I can
means
figure out where
and
that part is. Oh, right here. Okay.
yeah.
Yeah. So there's a lot of advantages and a lot of reason people invest in mortgage notes, right? There are a lot of different strategies. Another reason I fell in love with this product is because really you can custom make this experience for what you're looking for. So if you're looking for something truly performing, then like I said, you're going to go out there and look for some of that A paper where people have track records and they're paying on time, 700 credit scores, a lot of equity in there. So that's that paper that Wall Street chases after, and it's available to all of us. But that's where you really are worry free because those people are putting in their payments, right, on time, and you're not worried about it. Then there's all the way down to people that have not made payments all the way down to 4 or 5 years and just are delinquent, right? And those are people who are more aggressive and are looking for that strategy that comes with acquiring property. They're really looking to get property at major discounts, right? So there's many different strategies. So if you're still looking to get your hands on property, we're not, it's all good, as the kids say, right? No cap, right? Is that what they say? So you definitely can um, get access to property through this, but it's going to be at a discounted rate. So I have members of my community who use this, in my opinion, as like a game of Monopoly, where they go around and if they can get a asset at a low enough price through the note process, right, then they will go and that's how they acquire property. So they have cost bases that are much lower than anyone else. So anywhere from performing all the way down to non-performing, you have access to notes. It really depends on what your strategy is, your risk tolerance, and again, how much you want to be involved. So when I talk about passivity, that's usually what most people want to do because you have jobs, you have careers, you have other things, you're taking care of kids for that matter. And so if you realistically are saying to yourself, hey, I want to get involved. I want to have access to these institutional type returns. There's funds, like one I can talk to you about in a second, that we have a Reg D fund. There's performing notes, and these are quality performing notes that you can sit down and now know that you're going to get that passive income and have very low risk as far as any default. If you're looking for aggressive rates, right, you may find some people who are semi-performers, so they pay, you know, let's just say they're late every other month and but they make their payments. These guys you're going to get for a low rate. You're going to get a more aggressive return because you're going to be asked to tolerate that type of payment strategy and also have a risk of needing to take the home, right? Which usually, as banks do, they make more money if they end up taking the home. So, without going into that too much more, performing versus non-performing, real straightforward. Are they making their payments? Are they not making their payments? How consistently are they making their payments? How inconsistently are they making their payments? You can go as far as first and second liens. There's things like HELOCs that you guys are familiar with. We in our fund we go directly to HUD and we buy those reverse mortgages. If you're familiar with those products, very popular now, and so you can buy those. Those are home equity conversion mortgages, and so there's first position, second positions, and there's also those home equity conversion mortgages that you can purchase. And there's strategies, so you can make money out of all those. And then, of course, if you're really getting into it, there's commercial assets that have notes. Mostly everything that we have nowadays has a note on it, right? Think about it. Um, I always like to blame Microsoft on this because I feel like, and again, I'll age myself, but I feel like the minute they started charging monthly for Excel, because you used to
Mhm.
go to the store and just buy it, take it home, and it was
Yeah,
yours. Yeah, okay. So, and then after that, everyone was all in. But in general, think about that. That is them creating a note as well. They want that passive income coming in,
for
right?
sure. Jasmine, how
Right.
many of your clients would you say choose non-performing over performing notes?
That's a great question. I think to give you a straightforward answer, it has flipped over time because we're all getting a little bit more seasoned, right? And so less risk adverse. But in general, people come in about 60 to 40. 60% of them are looking to just get their hands in. They're looking for aggressive non-performing notes. They're trying to get capital gains, right?
Yeah.
And make up for lost time in some way or another. Otherwise, the other 40% are coming. They've got some retirement saved up. They just need to preserve it, protect it, and grow it steadily. And so this is some of the things that we specialize in bringing opportunities then to get you aggressive, right? And so this will show you some of the average numbers behind these notes, right? Average monthly payment. Again, if you're buying a note in California, it's going to be a lot more expensive, but your payments monthly is going to be what, $4,000 or $5,000 a month, right?
Yeah.
If you're buying something in Oklahoma, which is where we bought a lot of stuff in, some of these payments are sitting around $500 a month, right? So it's all going to depend on what your purchase price is. But on average, the interest rates typically range from between 6 and 12%, right? And then, like we mentioned, your IRA receives this income automatically. And so note terms are about 15 to 30 years. So do you have to hold the note for 15 to 30 years? No. No, ma'am. Right? So,
We have Yeah,
go
we
ahead.
have currently, Jasmine, many of our clients that are investing in these performing notes, in these non-performing notes. And I love that you highlighted the payment structure. Um,
Hmm.
so many of our clients have designed and worked with companies like yours to put all of this together initially, and then they just
Hmm.
kind of forget about it. And over
Right.
time, their initial investment could be a Roth investment. Let's say they purchased a note at $50,000, $100,000, and just steadily month over month they watch that balance grow over time tax free, just like you've illustrated here. Now for those clients interested in maybe 5 years down the road, they want to walk away from holding
Hmm.
this asset. What do their options look like? Is that something that you are going to get into a little bit later? I don't know if I'm
No, that's
rushing.
fine. Tell me the
Curious
question
about
one more
that.
time.
Just very curious about the client who may be sitting on this asset for about 5 years. They've had that
Right.
monthly steady income. What are their options if they wanted to liquidate?
Yeah, that's an amazing point because you hit the nail on the head. Obviously, it makes sense just from what you're saying that you do have a lot of people investing in mortgage notes. The average time a person holds a note is about 5 or so years. Same with the banks. Banks don't hold these notes. You ask why they sell them. If you do the math on it, they're going to only hold a note the most 3 to 5 years before they want to sell it. And that has a lot to do with the amortization schedule and all the interest that's collecting. It's going to make sure that their principal has not eroded so they can again sell it, right? And so getting that liquidity back is what the banks need to do because they're looking to move their money. That's their nature of their business. And some of us may have life events that come up, and or like he mentions, maybe ready to liquidate. And so this is a very liquid market. However, you have to know where the markets are, just like anything else. So I was really surprised when I first got into this. And this was, again, now talking on, 10 plus years ago. But I was surprised even then how many buyers and what the resources were and where you can get rid of these notes, right? So our community obviously loves to buy from within. So a lot of people
Okay.
sell to members within the community, but also there are so many conferences and so many. Once you get into the community, you can see other note investors. We love going to events put on by self-directed IRA companies like yourself. You may find someone who's looking to take on a note or looking to sell a note. So there's so many different areas to find these assets. And yeah, about 5 years is about the average time frame that people hold it, and that kind of correlates if you think about the other thing. The average um, borrower only keeps their mortgage for about 7 years before they're refinancing. So you may not even be able to hold this for 15 to 30 years because they what? Refinancing, right? So that means you're going to get a lump sum. They're going to pay you back all your money. And it's a really advantage, right? Now you've gotten 3, 4, 5 years worth of payment, and then boom, here's your principal back.
I may be jumping the gun here, Jasmine, but just a
No.
clarifying question. What's the
Mhm.
minimum amount that I could invest in a note? Does that vary on groups? What does that kind of look like if you don't mind painting that picture?
Yeah. You know, the truth of the matter is notes come in all shapes, forms, sizes, and price ranges, right? The real question, the real barrier is access, access, access. Is my friend Tiffany likes to say. I think she's on the call as well. But with that said, just to be direct, yeah, I've seen purchased and sold notes as low as 1,500 all the way up to 850,000 in there. Obviously, I have some for 33 million right now that are on some hotels, non-performing notes, right? So it goes up the whole structure. What I can say again is that this is not a product where you can go and buy, right? They sell in bulk. So if you think about HUD, when we go down to the auction, they require us to buy at least $5 million worth of these assets in order to win a bid. Okay. And so same thing in this industry. So one of the other genius things about, in my opinion, the NAP, the Note Assistance Program, is that once you join, you now have access to cherry pick, right? And it's going to be a lot less stressful than you going out and trying to source your own inventory. Now you've got to know the community, you trust where it's coming from. A lot of times, like I said, you may be buying a note from someone who's owned it for the last 3 or 4 years. So you've got the pay history. You can really be intimate with that asset before you buy it, which is the key. When you think about notes and uncertainty, which is a great way to kind of streamroll into this, but the real mystery about notes is how quality is that borrower? Are they going to keep making those payments? What type of life events are they going to be able to withstand the life events that happen? Not are they going to have life events, but can they withstand the economic environment, their personal environment, and still continue to make those payments? So that's the hard part to figure out, right?
For sure. No, I appreciate you breaking that down. That was super helpful. Thank you.
Of course. So talking about the uncertainty, right? So this is really where my specialty comes in. I have a degree in economics, a minor in industrial organization, and MBA. So I love, love, love talking about what's happening out there in the current environment, economic environment. But with that said, um, no matter where you stand on what's happening right now, I think we all can agree that things are pretty volatile in all of the segments, right? It's hard whether we got tariffs that are interrupting us and making it was inflation. There's certain things that make note investing a little bit more secure while you are going. So for those of us who are transitioning, right, you think about investing, because I remember earlier we talked about, most people investing performing or non-performing just like everyone else's strategy, you should just kind of you get a little more conservative, right? As the clock starts going. So people start adding these and want to add things like this more because they are backed by that real estate, right? This is a real property. We understand it. Worst case scenario, we get a house. A good portion of us have real estate investing backgrounds, familiar with real estate, or at least can imagine how we would dispose of actual real estate and what we would do with it in a time when corporations are gobbling up all the deeds out there, right? So we keep it to use as a rental, Airbnbs, all that good stuff, should we have to foreclose on it, right? So worst case scenario, unlike when someone who was a stockbroker, when stock goes down, right? TSA, Sports Authority, went all the way down to penny stocks numerous times before they end up going out of business, right? And so you can lose your money in any of these areas. So this, when you lose, you get a house, right? If you're going to foreclose on it. Predictable income streams, those monthly payments continue regardless of those market swings. Like I said, you can look at the borrower's pay history and the credit scores just to kind of help you determine. Again, you never know, but how predictable the income stream is going to be, and that pay history is really streaming. So a lot of us have notes that have been performing seamlessly for since we bought them 5, 6, 7 years, right? And so it's a good opportunity to get predictable income streams that are different from the dividends you get from stocks, right? That are non-correlated, as we talk about here at the bottom. So when you talk about the Bitcoin and all that other stuff, great opportunities. You definitely want to invest, but maybe when you make some of that windfall of money in a Bitcoin, you roll it over to something more conservative. And then eventually you get down to gold, right? And putting into that type of level of conservative. And when you're trying to get a little bit more protection. So yeah, these are some of the highlights. And as mentioned, it's not going to eliminate all of the recession risks if you think we have a recession or any type of economic volatility coming up. But it's a way to get peace of mind because again, think about yourselves. When it comes down to it, we're taking this, we're feeding our families, right? And the gas in the car. This is what it's coming down to. And sometimes a bankruptcy is just so you can make sure you can take care of those three things, which is us.
Love it.
So I want to talk about risk, there, we talked about a majority of these. It's not, at least as far as I'm concerned, it's not good to leave a call without talking about some of the risk, right? It's not all roses. So yeah, the borrower could stop paying. And so usually, especially depending on how long they've been into the mortgage, so that's the key thing, how seasoned is a mortgage, right? If they've own this home for 8+ years, they're less likely going to let it go because there's equity in the house. So you may just have to work with them. You are the bank now, so if you own the note and you're not in a fund, then you can go in and you'll negotiate through your attorney some sort of loan modifications or something that will make it make sense for everyone. But you do have control and a lot of rights, as you see. The banks are always winning out there, so you have a lot of rights that can protect you from that. So it's not that it's not a risk, but it's one that we can address. And once you're a member of the Nap Nation community, you're there for life. So you can always pick up the phone and give me a call and say, "Hey, Jasmine, listen, something came up. I just have really need your advice." So I just spoke to a few members who finally got someone out of a house, and now they took possession of it. And he's like, "Hey, is it time for me to sell it?" Yes, it is. So now he's working on getting rid of that, and then having that windfall going right back into his IRA. The property. What if the property declines in value? Well, the good news is that two things. You've got the law of gravity working for you. And what does that mean in this secondary mortgage market? The law of gravity means that every time that borrower makes a payment, the balance goes down. Balance goes down. So they're paying you and your cost basis is reducing. At the same token, you probably purchased it at a discount, anywhere from 5 to 10%, right? And so you have some equity in there already. And of course, it may already have come with some equity. So you have a lot of cushion in there. And this is again why we love this. It's hard to lose money in notes, but you can because of the equity that you're going to find in these notes if you are purchasing them correctly, right? And that's something we go over in the community. Um, Servicing complications, right? This is probably one of the banes of your existence, if I'm going to be honest with you about being a mortgage note investor, right? It's those third party people, right? Working with your attorneys, working with your servicers. So sometimes you have to go in and, talk to your servicer and find out what they help you with your loss mitigation efforts. So with that said, the person you're dealing with are going to be your servicers and your lawyers, not the borrower. So you want to keep that in mind. And of course, notes have limited liquidity. So what do I say by that? What I mentioned before is that you can sell these things, but it typically is going to take between 30 to 45 days, right? So pretty much the same as a home if you're putting it into escrow. But for the most part, the liquidity being limited really comes about how many other note investors you know. If you are at these conventions, if you know other communities, if you are connected, then you should be able to get rid of these things fairly quickly. So
You
real
know,
quickly, I want to
Jasmine,
jump into what happens if you don't want to do all that, right? If you want income without operations, right? So we have a fund. It's called the RDMO2. We just launched it. There's a new HECM, which is a reverse mortgage auction on February 10th, which we are going to show up with. We have joined forces with PEMCO Capital Management. They have over 12 years worth of fund management and institutional fund management under their belts. And so what does that mean? For the last 12 years, they were only doing fund to fund, so running institutional money through their program. And so now, me, someone always seeking to get institutional returns and opportunities to my community, I was fortunate enough to have a track record to attract a company like this. So now we have our own fund. It's RDMO2, which stands for Residential Distressed Mortgage Opportunity. Okay. And we are buying non-performing notes and reverse mortgages, as mentioned. So if you don't want to do all the operations and you don't want to go through the work yourself, passive income and getting exposure to this is amazing through funds like this. This is a Reg D fund, and you are looking at 9% preferred return and a 70-30 split. So a 70-30 split is where the uniqueness comes in, right? And so, question for Joel, which I secretly, obviously, I know the answer, but the question is, can you use your IRA to invest in a fund?
absolutely.
Exactly. So this is another opportunity if you're saying, hey, listen, I'm not necessarily interested in looking for a note, sourcing a note, or reviewing it or learning anything. I'm too busy, but I do want access to these type of returns. Then getting into a fund is one of the best ways to do that. And this is the opportunity that we have for our community. You can join the NAP Nation, which we are affectionately called, and invest alongside of us. This is the who, the what, and the why. And so, in my opinion, this is really for those of us. This is part of my retirement plan. My next 5 years going to retire is investing in this fund. So you're going to have an institutional management going in there aggressively. PEMCO has successfully participated in the last 6 years worth of auctions at HUD. So they got the relationships in place. They know how to take the bidding process down, right? So going in with them and allowing them to go and cherry pick these assets to the extent that they can win the bids on them after they put in their offers. And then bring those home to us and then work it out for us for the standard fee is an amazing opportunity. So the other thing about when you invest with your self-directed IRA money, you are supposed to be limitedly involved. And do you mind telling a little bit about that, Joel?
Yeah, absolutely. So anytime you're using your self-directed IRA, you do want it to be a passive investment. To your point, you don't want to be involved in the day-to-day operations of a fund like this. So if I wanted to use $100,000 in my self-directed IRA, I want to source opportunities like this, opportunities that are managed by other partners or professionals, that have the 25 plus years experience because if I'm involved in the management of this fund that I'm actually investing my IRA money in, I'm now crossing the line and engaging in a prohibited transaction. They call this self-dealing. So that's why Jasmine and PEMCO and other companies like this develop these opportunities for self-directed IRA investors because they know that there needs to be opportunity for you to go invest in something that you are not involved in, that you're not self-dealing. So hopefully that kind of helps paint a picture there for you, Jasmine, and why these opportunities are so beneficial.
Yeah, and of course, I'm sure that brings up more questions, right? More and more questions. So we are having Joel speaking at our Lunch and Learn this month. So you can always stop by, and I'm going to have him specifically talking about QRPs, qualified retirement plans, and the do's and don'ts with those, just for a refresher for most of our community, and then just some new experience for those of you who are considering rolling over and just learning more about, how to do it properly. So just real quickly, again, 9% preferred return. So when you think about tax sheltering that, when you couple that with your retirement money, this is really a good opportunity to get aggressive for those of you who sat down with your financial planner, right? So as someone who was a financial planner, I'm still always encouraging you, sit down with a financial planner. You guys are going to come down and ask you, put together a plan. I'm going to need to hit this amount of money and I'm going to reverse engineer it and need this amount of return. So what you do then is now if you sit down, you're like, I'm going to need a 9% or higher return to meet my goals. Now you know where you're going to get them safely. So this is available for you guys. As mentioned, it's on our website, and I also put the link in there. If you go to NAP, I'll show you that in a second. You can find this, but I'm not going to spend time on the due diligence and stuff like that. You can go and look at that if you're really interested. You may be interested in how they compare to owning physical real estate. And what I will say to you is this is my quick snapshot of that because, again, for those of you who are out there, you may be at a different stage in your life. I was full on flipping. I flipped in Indiana, Mississippi, and in New Jersey. So, but that was in my youth when I was young. Didn't have the kids chase me around. So, when you may be a positive or maybe a time in your life, depending on where you are and whether you need direct control of the property and the decisions, potential appreciation upside, obviously, and especially if you're doing a flip. But it requires active management and complexity of your expenses versus, if you seek out a truly performing note, right? So if you're not in the fund and you just get one performing note and you're like, hey, I want something that's really good pay history because I'm not allowed to be involved. I'm not supposed to be, again, with notes, you can't go out to the house. And so you delegate that to the servicer collects. So you have the proper people in place taking care of all the active parts of you owning that individual note within your IRA. So passivity is key when it comes to owning the notes. Even when it comes to compliance purposes, no property maintenance or repairs, right? When you're home and your sink breaks, you don't get to call Bank of America. They don't get to call Bank of Joel, Bank of Jasmine, Bank of whomever investor is on this call. So a lot of times you're gonna have lower transaction costs, 100%, and a simpler exit, even though you may think, where am I going to sell it? When you do sell it, you're going to find it's a much more easier process. So, are
I
there any
love that you
questions out
broke
there
that
that I can
down.
slow down for?
No, I just wanted to say I love that you took a minute there to just compare the two. Both are great opportunities depending on your season of life and your investment strategy. So I appreciate you kind of putting that out there and even sharing with the audience that you've been there. You've been on both sides of the table. You know what it looks like. So I do appreciate that and kind of fitting the mortgage note opportunity into somebody's thought process. So thank you.
Yeah, 100%. I mean, you're looking at someone who once I found out about these opportunities, I don't know when's the last time I actually had a W-2, but I did. Last job I had was at GMAC Homecoming, which General Motors, the car company, at some one point was the largest originator of loans, their original funding arm, right? So just knowing the opportunity in here, seeing it from that standpoint was like, wow, there's enough in here for me to live my little simple life that I'm trying trying to live out there. So who are mortgage notes is a great way to transition into like who are they going to make sense for and who they don't make sense for. It's not for everybody, right? I'll be the first to tell you that, right? And so if you're income focused, this is just my opinion, right? Obviously, if you may say, hey, it's good for me too. It's not one hat size fits all, but I will say, from my standpoint, if you're income focused, you're about to retire or retired currently, and you need to move some money and have very little to low risk, then this is the product for you. Looking to diversify, right? This is definitely an alternative investment, right? And if you're comfortable with being semi-illiquid, because again, you don't need the money, you just need to park it and protect it, this is that asset for you. And patience, right? If you listen to my podcast, I have a Naked Notes podcast. We're actually releasing a new one here on the 15th called The Notress. But if you listen to any of my podcasts, I'm going to tell you the biggest muscle you need to exercise, obviously in life, without giving life lessons, but even in notes, is going to be your patience muscle. You must be patient because that's what it is, right? You're saying, hey, I want my money to come in consistently and over time. I'm not in a rush. So,
I love it.
but if you are liquidity dependent, right? You need access to your money immediately. You can't tie it up. You don't need to put it anywhere. Then this is not for you. So I have a lot of customers who live in Texas. So when they get bonuses, they're big, right? They make decent money. So when they get those bonuses, they want to put them somewhere. They don't need it to be liquid. Matter of fact, the less liquid, the better, especially for the next 5 or 10 years while the kids are, 3, 4, 5. If you want to be hands off, right? So if then I would say, and you're unfamiliar with real estate fundamentals, then this may or may not be something that you want to tackle, especially if you're resistant to those things. If you don't have the time to do the due diligence. So if you want to be hands off, then that's where the fund would come in play, right? But much like if you think about if you're out there looking at the the stock markets, or if you're day trading or anything, a lot of these guys are up in the middle of the night, so you have to be hands on here as well. I don't want to mislead you to say that. And if you only focus on like capital gains, right? Then this may not be the best fit for you. So a lot of us have different buckets of money. And so that's why I'd say consider this for that one bucket that's going to be a little bit more conservative. That's it for me.
I
I want to
love
make
it.
sure that I have my information here if you want to get in touch with me. But are there any questions?
Yeah, please drop your questions in the chat if you have any. Jasmine, this was super, super helpful while we're waiting to see if we have any questions that do come through. I love that you took the guesswork out of everything. For those that are listening today, it's nice to see where it does make sense and where it may not make sense for an individual or retail investor. So I do appreciate that. And I know you dropped the link to that landing page in the
Hmm.
chat for anybody to click on right now. Those that are listening, I'd encourage you to pull that up. And, if you're listening to this recording later on, I'll make sure that this is also in the email sent out to you. But go ahead and go through that
Perfect.
when you have some time so that you can understand even deeper and maybe generate some questions that you can approach Jasmine with in a one-on-one. I did notice that there was a discount there articulated at the very bottom of
Yes,
the
I was going to
business. I
mention
think,
that before you left. Yeah, if
yeah,
you are
go ahead.
listening to this through the Heritage platform, just mention that to us when you call and you're interested in joining us. We're going to give you $500 off joining to get into our premium program. There's only two levels. It's $4,000 to join, and then after your first year, it's going to be $175 a month for the consistent resources and access to the inventory. But with that said, if you are considering joining and you're watching this podcast, because I know we're going to put it out there, it's going to be for a while. It doesn't expire. Let us know, and we'll be happy to connect you with the community and get you that $500 off.
I love that. Yeah, and we extend this to anybody that is listening today every time they join our Lunch and Learn. But if you need a self-directed IRA, you have some funds sitting with a big discount brokerage like Charles Schwab or Fidelity, and you'd like to move into something like this. Connect with us at Heritage IRA. We're willing to waive your setup for you. So we're actually willing to go through the entire process, establish your IRA, get your funds moved from your old IRA or your old 401k into the new self-directed version that we offer at no cost. And then we'll help you invest that with Jasmine flawlessly. We've got it down. We know how the process is designed. We have many of our clients that are doing it already. So we're happy to do that for you just by participating in this lunch and learn. So um, if you have any questions, visit our website, heritageira.com, and we can talk more about that. So I love it. It looks like Tiffany, she dropped the website. There it is right there. I know you mentioned
Appreciate it.
napprivateequity.com was the website. Thank you, Tiffany, for putting that in there. Mention the $500 discount for sure. And again, maybe it might take you some time to come up with some questions. That happens all the time after the fact. So please reach out to Jasmine. She's a wealth of knowledge, as you can tell. And
I must have hit all the pain points, so I'm excited about that.
absolutely. Yeah, yeah, I think you did. I think you did a great job going through that. And again, they can review that on the landing page. So we made great timing. It's 10:45 here in Salt Lake City. So I appreciate everybody joining us today. Jasmine, thank you. This was super helpful for us to have you come on and share a lot about your
And
experience.
I'll just
Please.
add before we leave, Tiffany just put her information. She is in charge of our member relations. So
Okay.
she will be available to walk you through what it means and what it's like to join the community. And there are also a few Nat Nation members on this call who are always available to let you know because we are an open book community. So thank you so much again.
Absolutely. You're very welcome. And thank you all for joining. And we will see you next week. Thank you. Bye bye.